Hello, everybody, and welcome to today's training. My name is Tasha Smalls West, and I'm the founder of West Financial Services, LLC, where we help landscaping business owners keep more of what they earn through done-for-you accounting so they can work less, grow smarter, and stop stressing about money. And I'm truly glad you're here today because what we're going to walk through is going to change the way you approach taxes, record keeping for your business, and financial decisions in your business from this point forward. Now, if you own a landscaping, lawn care, tree service, irrigation, hardscaping, or landscape design business here in Florida, that means you're no stranger to hard work. You're out in the heat, managing routes, juggling equipment, and making your customers happy. But when tax season comes around, I know it can be stressful. Many landscaping business owners feel overwhelmed because they don't know what to expect. Some of you get hit with a tax bill that makes no sense to you, and others may feel like you're missing out on deductions. And almost everyone wonders if they're paying too much. But imagine walking into tax season next year knowing exactly where your numbers stand without scrambling or guessing. Imagine not feeling that knot in your stomach because everything is already organized. So today we're taking the guesswork off your shoulders. This session is about helping you get tax ready now before the end of the year so you can walk confidently into 2026 without that stress, fear, and without that surprise tax bill. So in this training, I'm going to show you what matters most to get done before the end of the year, what you need to double check in your business, and what you can do now to legally keep more of what you earn. By the end of our session, you'll understand how taxes actually work when your business is a disregarded entity. You'll understand what you need to get done before December 31st if you want to reduce your tax bill. You'll understand how to organize your numbers even if you're a little behind right now. You'll understand the deductions landscapers miss the most, and you'll understand how to schedule a discovery call with us so we can walk through your numbers and make sure that you are tax ready. And I want you to know something up front. None of this training is about finding loopholes or quote unquote creative tax tricks. We don't teach anything that isn't legal, ethical, and sustainable. So everything I teach today is going to be based on IRS rules, years of experience in this industry, and what actually has worked for small business owners. Now, before we dive in, I do want to remind you about something important. Just for registering for this workshop, you should have already received an email with your bonus tools included. And by the end of today's training, you'll know exactly how to use those tools, where to plug them in, and how they connect to your taxes. So you're not going to be starting from scratch because you already have those tools. And now you're going to learn how to put them to work. Now, if you haven't seen that email yet, just do me a quick favor and check your inbox and your spam or junk folder when we get done. And if you still don't see it, don't panic. Just hit reply to any of the emails you've received from me or reach out to me directly, and me or my team will make sure that you get access to those bonuses. All right, so let's get started. And we're going to jump into the very first thing every landscaping business owners must understand because it's the root of almost every tax problem you experience. And that is how taxes work when your business is taxed as a disregarded entity. Now, most small business owners who work in the green industry start with the simplest setup possible, and that's either as a sole proprietor or a single member LLC. And that's usually because it's the easiest and most inexpensive way to get started. You register the business, you open a bank account, you get your equipment, and you get to work. It's straightforward, and there's absolutely nothing wrong with beginning that way. But the tax side of it, that's a whole nother story. That's where things can start to get confusing and expensive. So this is because when your company is registered with the state as a sole proprietor or as a single member LLC, the IRS taxes it as what's called a disregarded entity. That basically means that the IRS sees you and the business as the same person. There's no separation. That means all profit from your landscaping jobs is treated like personal income, even if you didn't actually pay yourself all of that profit. So let's imagine your business brought in around $95,000 this year. And after fuel, mulch, dump fees, equipment repairs, insurance, and all of your other operating costs, let's say you end the year with around $60,000 in profit. Whether you take all $60,000 home or leave half of it sitting in the bank account, it's all taxed the same. And this next part is where most small business owners get blindsided. The IRS is going to tax that profit in two different ways. First, you pay income tax based on your tax bracket. But then, on top of that, you pay self employment tax, which is 15.3% of the profit that you made. Now, that self-employment tax, it covers Social Security and Medicare. Usually, when someone works a regular job as an employee, they pay half of that amount and the employer pays the other half. But when you run your own business, you pay both sides. So, in this example, if your profit is $60,000, that full amount is used to calculate your self-employment tax. It doesn't matter if you kept money in the business for a new mower. It doesn't matter if you saved the money for a slow season. It doesn't matter if you paid yourself the entire profit. The IRS taxes all $60,000 as if every dollar hit your pocket. This is why so many people in this industry feel like they earn good money during the season, but then their tax bill tells a completely different story. And it's not that you're doing anything wrong. What's happening is that you're being taxed in a business structure that wasn't designed for a growing landscaping operation. And here's the part most business owners never hear. Once your business reaches a certain level of profitability, the sole proprietor and single member LLC structure, it becomes the most expensive setup for taxes. And when that happens, there are only two ways to reduce your tax bill. You can either reduce your profit or you can move into a new tax structure that treats your income differently. And here's the good news. That's exactly what we're going to talk about a little later in this training. So we will touch briefly on the S Corp today to help you understand what tax savings are possible once your business reaches the right level. But before we talk about any advanced tax strategies, I do want to make sure that you're fully prepared for this year's end because once December 31st passes, most of the opportunities to lower your tax bill pass with it. That means that the most important thing you can do right now, no matter how much your business made, is to clean up your numbers, to understand what the IRS expects, and to claim every single deduction you're legally allowed to take. And that's exactly where we're going next. One of the biggest advantages you have right now is timing. When you prepare before December 31st, you can still make changes to reduce your tax bill. So let's start with the foundation, your books. In any landscaping business, good bookkeeping is just as important as good equipment. And it doesn't have to be complicated, but it does need to be clear, organized, and up to date. Think of your books as the story of your year. If that story is missing pages, is out of order, or is written in pencil on the back of gas receipts, it becomes almost impossible to file an accurate return. So there are three areas you want to fix before year end. Those are your income, your expenses, and your bank accounts. Now, first, let's talk about income. You want to make sure every payment from clients is entered correctly. So if you use a software like QuickBooks or Wave, double check your deposits and categorize anything the software marked as uncategorized. And if you accept cash payments, make sure those are recorded as well. It's better to report it accurately now than to have to explain inconsistencies to the IRS later. Next, let's take a close look at your expenses. As a landscaper, you probably deal with a large volume of small purchases like gas, trimmer lines, parts, repairs, and other odds and ends. It adds up quickly. This is exactly where money gets lost and deductions get missed. So you want to go through your bank and credit card statements and make sure everything is categorized correctly. One missed receipt, that's not going to be the end of the world, but consistent tracking is what's going to help you keep more money in your pocket. Now, this is also the time to make sure that you are separating your personal and your business spending. If you've been using one card for both, it's okay, but it needs to stop now. Go through each of those mixed charges and make sure they're categorized properly. And then moving forward, I strongly recommend keeping your business expenses on one dedicated card or bank account. It makes your books cleaner and it protects your business. And it makes tax time so much easier. Now, the third part of year-end cleanup is going to be reconciling your bank and credit card accounts. To do this, you want to compare your bank and credit card statements to the numbers in your bookkeeping software or spreadsheet or whatever you use to track business income and expenses. If the numbers don't match, fix that now. Don't wait until March or April when you're trying to file taxes. Now, before we move forward and talk about deductible expenses, let's first cover what the IRS's definition of a deductible expense is. A deductible expense is something the IRS considers ordinary and necessary for your specific line of work. Now let's break down what those terms, ordinary and necessary, mean. Ordinary means it's common and accepted in your industry. So, for instance, for a landscaping business, things like fuel, equipment, repairs, tools, supplies, uniform, and marketing are all ordinary because people in this industry use them every day. Necessary means it's helpful and appropriate for running your business and increasing your potential to generate revenue. For example, you could run your business without certain apps, tools, or software, but if they help you to operate more efficiently, communicate with clients, or manage your finances, they count as necessary. A simple way to think about this is if you bought it because it helps you run, grow, or maintain your business, and you can prove it, it's more than likely deductible. But the key to being able to claim deductions is your documentation. If you keep receipts, track the purpose, and record it in your books, you're in a strong position to claim those tax deductions. Now, the first deduction area we're going to cover is depreciation. If you're planning to replace a mower, upgrade your equipment, or buy new tools, you may want to make that purchase before year end. With the passing of the One Big Beautiful Bill Act, you can use Section 179 and bonus depreciation to deduct the full cost of these items this tax year instead of having to spread the deduction out over several years. What that means is you could lower your taxable income now and still get the equipment your business needs. And this is the case whether you finance the equipment or whether you buy it outright. Another area is your vehicle related expenses. Whether you're using a truck, trailer, van, make sure you're tracking your business miles and keeping receipts for fuels, repairs, tires, insurance, and maintenance. Most companies in the landscaping industry drive more than the average business owner, so this deduction, it's often a large one. Here's how the vehicle business deduction works. You can choose one of two methods, either the standard mileage method or the actual expense method. Now, the standard mileage method lets you take a deduction based on the number of business miles you drove during the year. It's simple. You track your miles and multiply them by the IRS mileage rate. For tax year 2025, that's going to be 70 cents per mile. The actual expense method allows you to deduct the business percentage of your actual vehicle expenses, including fuel, oil changes, insurance, repairs, tires, interest, lease payments, even depreciation. Now, for landscapers who put a lot of business miles on their vehicles, both methods could work well. You just want to figure out which one gives you the biggest advantage. The key is going to be documentation. If it wasn't tracked, you shouldn't be deducting it. This is why keeping a mileage log or using an app to track it is so important. It turns all that driving you already do into legitimate tax savings. Another deduction many business owners miss is the home office deduction, especially for solo landscapers or owners who manage their own scheduling, estimates, payroll, and all those other admin tasks from their home. Even if you don't have an entire room that you use as your office, if you have a simple dedicated workspace where you perform those admin tasks for your business, that counts. You have two options when it comes to calculating your home office deduction. You can either use the simplified method or the actual expense method. Now, if you use the simplified method, which gives you $5 per square feet of your workspace up to 300 square feet, you get up to a $1,500 deduction. And this method, it's just like its name. It's simple to calculate, and you don't have to be overly concerned with collecting that backup documentation to prove the deduction. Now, alternatively, you can use the actual expense method, which lets you deduct a percentage of your household expenses like utilities, internet, homeowners insurance, rent, mortgage interest, cleaning, and repairs. And it's based on the square footage of your workspace compared to the square footage of your entire home. As long as the space you're claiming is used regularly and exclusively for business, you're good to go. Now, this deduction is going to help you save on the cost of running your business from your home, even if all you have is a small corner of the room you use to do admin work. Next, let's move into business travel. Now, if you traveled for things like job site training, certification courses, continuing education, vendor events, or even out of state jobs, those costs can be deductible if you track them correctly. Business owners often overlook meals, lodging, mileage, and other travel related expenses simply because they're not sure what they can deduct. Well, here's what you can deduct for business travel. Transportation to and from your destination is deductible, whether that's driving your truck, flying, or taking another form of transportation. Your hotel and lodging costs are deductible when the trip is primarily for business, and your meals while traveling are also deductible as long as they're connected to business activities. You can also deduct things like parking, baggage fees, rental cars, tolls, even tips related to business services while you traveled. The main rule is simple. The trip must have a clear business purpose, and you must keep record of where you went, why you went, and what business was conducted. And here's another strategy that you still have time to use before the end of the year: hiring your kids. If your children help you in business with things like cleaning equipment, posting to social media, organizing supplies, or even helping you with those admin tasks, the business is able to pay them a reasonable wage for the work they performed. What this does is it shifts income into a lower tax bracket inside your household and creates legal tax savings that stay in your family rather than going to the IRS. And as an added bonus to this strategy, children who are under the age of 18, they're exempt from federal income taxes as well as Social Security and Medicare tax when they work for a parent's sole proprietorship or a partnership where each partner is the parent of the child. Why is that a bonus, you might be thinking? Well, think about it. You can pay your child under the age of 18 up to the standard deduction amount, which for tax year 2025 is $15,750. That child won't have to file a tax return to report the earnings. And at the same time, you, the parent who is the business owner, are able to write off the amount you paid your child as a tax deduction. Now, here's how the hiring your kid strategy works. First, the child has to be performing real and age appropriate work. You're not going to hire your 3-year-old as your social media manager, but you may hire them to model for some ad copy for your business. Next, the pay needs to be reasonable for the work they perform. You need to keep records of their hours, the tasks they perform, just like you would with an employee. And lastly, they must actually receive the money, meaning you pay them through a real method, not just on paper. So whether you pay them by depositing the money into their bank account or into a college savings account or even an early retirement plan option, you have to be able to show the movement of those funds from your business to your child. Another big deduction, of course, comes from payroll and subcontractor payments. Now, you can deduct payments to your crew members even if they're not hired as W-2 employees, but only if you have the appropriate documentation to back up those payments. The biggest mistake I see business owners make is when they're paying helpers in cash or with apps like Cash App or Zelle. They don't track the payments and they don't have the worker to complete a Form W-9 before they start working. So if you paid someone more than $600 as a contractor, especially if they're not operating as a formal business, you'll need to issue them a Form 1099 for the amount you paid them. That way, you're able to write off what you paid them as a deduction. But if you don't have them to complete that Form W-9 first, you don't have the information you need to even issue their 1099. And that is where you run into problems because without that form, the IRS may deny the deduction, and that's going to leave you stuck with a higher tax bill. And let's talk about a few miscellaneous deductions that frequently get ignored, but they can really add up. You can deduct the business portion of your cell phone and internet, especially if you use them for client communication, for checking and responding to business emails, estimates, scheduling, or running your apps. You can deduct client gifts up to the IRS limit if you gave end of season appreciation gifts or thank you items. Meals with clients or business partners are 50% deductible when the conversation is business related. And continuing education like certifications, online courses, workshops, and industry training is fully deductible. Advertising and marketing. Things like Facebook ads, yard signs, website costs, printing, logos, uniforms, those are all deductible. Interest you pay on business loans, credit cards, or equipment financing, fully deductible. Bank fees, merchant fees, software subscriptions, and payment processing costs are all deductible as well. Now, individually, each of these things seem small, but when you add those up over the year, they make a huge difference in your tax bill. Outside of your deductions, a very important yet overlooked step by business owners is making sure your estimated taxes are on track. Now, if you had a strong season, especially if you picked up new clients or expanded your route or even raised your rates, you may need to adjust your final estimated tax payment. Getting ahead of that now can help you avoid penalties and surprises when you file taxes. Now, the IRS, they expect self-employed business owners to pay taxes 4 times a year in April, June, September, and January. Those payments should include both income tax and self-employment tax on the profit you made each quarter. Now, if you underpay during the year, the IRS can charge penalties even if you pay everything in full at tax time. Your last estimated payment for the year is going to be due on January 15th. So this means you still have time to adjust that payment based on how well your season turned out. Making that adjustment can prevent penalties and reduce your stress during tax season. Everything we're talking about right now is about giving you clarity and control. When your books are clean, your deductions are organized, and your accounts match, your tax return becomes a simple process instead of a stressful event. And you put yourself in the best position to claim every deduction you're legally allowed to take. Now, in just a moment, we're going to talk about a few advanced tax strategies, including a short introduction to the S Corp, not with the purpose to convert you to an S Corp today, but to help you understand what tax strategies are possible as your business grows. But before we get there, I do want you to feel grounded and confident about where you stand today and what action you can still take before the year ends. So once you have the basics in place, clean books, organized receipts, and a solid understanding of how your business is taxed, then you're in a position to start exploring more advanced tax strategies. These are the strategies that can really help you keep more of what you earn and start running your landscaping operation like a true CEO. Now, I'm only showing you this so you know what's possible as your business grows, not because you necessarily need to change anything today. Your only job right now is understanding the foundation. As we discussed at the top of this training, most landscaping industry businesses start off being taxed as sole proprietors or single member LLCs. And again, there's absolutely nothing wrong with that in the early stages. But once your business becomes consistently profitable, the tax system begins treating you in a way that works against you instead of for you. That's why some small business owners eventually consider moving into an S corporation tax selection. Now, again, I'm not going deep into this today. That's not the purpose of this workshop. but I do want you to understand the concept so you can see what's possible. So here's the simple version. When your business grows past a certain point, you no longer want all of your profit exposed to self-employment tax. And that tax adds up fast because your expenses may be high, your fuel costs are ongoing, and you're often reinvesting back into your business. But that money that you're reinvesting is being taxed. The S Corp changes the way your profit is taxed. With the S Corp, your taxable income is split into two buckets. The first bucket is a salary where you pay yourself as an employee of your business. The second bucket is distributions. Instead of paying income tax and self-employment tax on every dollar of your profit, only your salary is subject to both those taxes. The rest of your profit, your distribution, which is what's left after you pay yourself that salary, isn't. For a landscaping company that's starting to gain traction, this can create some huge tax savings. But tax savings aren't the only reason people consider the S Corp structure. It also opens the door to multiple tax strategies and deductions that the sole proprietor and the single member LLC structures don't allow. These includes things like being able to reimburse yourself for business use of your home without having to claim a home office deduction, being able to reimburse yourself for vehicle expenses without having to claim the vehicle deduction, being able to set up a reimbursement for your health insurance premiums, and being able to take advantage of the Augusta rule, which lets you rent out your home to your business for up to 14 days a year, with the income being tax-free to you and a deduction for the business. Again, I'm not going to walk you through the full S Corp today. That will happen in a different training because it deserves its own time, examples, and a clear explanation of when that election makes sense and when it doesn't, because not every business should become an S Corp. Not every landscaper is ready for it, and not every business owner is going to benefit in the same way. But here's the most important thing I want you to take away from this section of the training, and that is that your tax structure should match the current size and profitability of your business, not the stage you started at. So if you're still paying taxes the same way you did in year one of your business, but now you're running a full route with steady clients and more money flowing through your accounts, then it may be time to start looking at what options give you more breathing room and save you in taxes. So far, I've given you quite a bit of information. I've shared key deductions available to you and told you what steps you need to take to make sure you're ready for tax season. But now I want to walk you through the steps that you should take as soon as this workshop ends. This is going to be your end of year action plan, and I'm also going to share the bonus resources you received to help you implement it. And as we go through these steps, don't worry if it feels like you're behind, because what matters most is that you showed up and you're starting now before the year closes, because every day you wait just makes the work harder and it makes your tax bill larger. So your first step is going to be to catch up with your bookkeeping. All that means is you're going to tally your income and put your expenses into categories. To do this, you want to gather your bank and credit card statements. And if you've been mixing business and personal finances and have some business transactions on your personal bank and credit card statements, you're going to need to gather those as well. The next step is going to be to update your mileage and vehicle logs. Now, if you've been inconsistent this year, don't panic. You can still capture a lot of your mileage before the year ends. Go through your routes, your job history, your supply runs, even your work calendar, and run your estimates. Now, to help with that step, use your mileage and vehicle deduction tracker, which is one of your bonuses. That's going to help you document your vehicle expenses in a way that the IRS will accept. And for service businesses like landscaping, pressure washing, junk removal, or handyman work, those vehicle expenses add up fast. So logging it can save you thousands in taxes. Then you want to look at your home office setup if you regularly manage your business from home. Remember, if part of your home is used exclusively for business, the IRS allows you to deduct a portion of those household expenses, but you have to calculate it correctly. To help with that, use the home office deduction tracker that's inside your bonus bundle. It's going to walk you through how to track and apply the home office deduction accurately. Next, you want to review any equipment or asset purchases and record them on the depreciable assets worksheet in your bonus tools bundle. Also, think about assets you still plan to purchase this year. If you know you're going to replace a mower in, say, February of next year or upgrade a trailer in March of next year, you may just want to go ahead and purchase them this year before December 31st if your cash flow allows. Remember, with that section 179 and bonus depreciation, equipment purchases can reduce your taxable income now instead of later. But listen, don't buy equipment just to get a tax break. You buy it because you need it. And the tax break, well, that's the bonus. So use this last part of the year to plan strategically instead of reactively. Another key step is to settle up on contractor payments. So if you paid helpers or crew members, double check that every payment is documented, and if someone earned more than $600 as a contractor, you'll need to make sure they filled out a Form W-9 so you can issue their 1099 NEC by January 31st of next year. In your bonus tool bundle, you'll find a guide that will walk you through what you'll need to do when hiring and paying independent contractors. And if you plan on paying your children for legitimate work in your business, whether that's cleaning the shop, organizing tools, helping with social media, or assisting you with admin work, it has to be documented properly. So the Hiring Your Kids guide is going to help you do this so you can be sure you have what you need to take advantage of that deduction. Then you'll want to review your estimated tax payments to make sure you're on track. If you're not, then your final estimated tax payment may need to be adjusted so you don't incur any underpayment penalties. As we wrap up our time together today, I want you to pause for a moment and recognize something very important. You showed up for this workshop because you're trying to run a business the right way and actually take responsibility for the financial side of your business. That puts you ahead of most people in this industry, and you should be proud of that. You've learned today what most self-employed business owners never hear until it's too late. You now understand why being unorganized costs money. You now understand how the IRS sees and taxes your business, and you understand exactly what steps you need to take before December 31st to reduce your tax bill, strengthen your records, and to walk into tax season with clarity instead of stress. And we've given you tools that you can use today to accomplish this. But information alone doesn't change your tax bill. Implementation does. This is the part where most business owners stumble. They learn what to do, but never actually create the plan to put it into action. And that's exactly why I want to invite you to take the next step. And it's a super simple one. I want you to book a free 30-minute discovery call with me. This call, it's not a sales pitch. It's not a generic consultation. It's a focused conversation about your business, your numbers, and what you've learned today so we can turn all of this information into a real plan that's going to fit your situation. On this call, we're going to talk through where you are right now financially. We'll look at how you're currently tracking income and expenses, how you're handling things like contractor payments, vehicle use, and estimated taxes. And then we'll identify your biggest opportunities to save on taxes and your opportunities to get things in order before the year ends. We'll also talk about your goals for next year, whether it's growing your route, adding crews, buying more equipment, or just finally feeling on top of your finances instead of behind them all the time. My job on the call is going to be to help you clearly see what you need to change and what your options are. Now, because this is a real working conversation and not a quick 5-minute chat, I can only take 10 of these calls each week. So if you know you've been putting this off and you know tax season always sneaks up on you, or if you're tired of feeling like you're guessing with your numbers, I want you to grab a spot while they're still available. Right beneath this video, you'll see a link to schedule your free 30-minute discovery call. All you have to do is click the link, choose a time that works for you, and answer a few quick questions so I can get a snapshot of your business before we talk. Don't overthink it. Don't wait for things to be perfect. Just pick your time and lock it in. Okay, so here's what I want you to do as we wrap up. Number one, commit to taking at least one action from what you've learned today in the next 24 hours, whether it's gathering your bank statements or starting your mileage logs. And number two, Schedule your discovery call so you're not doing this alone. You don't need perfect books. You don't have to have kept every receipt. You don't have to have everything figured out. You just need to take the step that moves you forward. Because, guys, you deserve clarity, you deserve confidence, and you deserve to keep more of what you earned. Thank you so much for spending this time with me today. I appreciate you. I'm cheering you on, and I look forward to talking with you on your discovery call and helping you move into the next year with more confidence and with more money in your pocket.